Well, to decode how these elections will have an impact on the markets, we are now joined by Indranil Sengupta, economist and head of research at CLSA India. Indranil, good morning. Great to have you with us here on the program here at CNBC-TV18. Prashant this side. I'm sort of thinking whether I should start with elections, and you've written a note there. And of course, the other big story is the big jump in oil prices and how that kind of feeds into the macro equation. Let me just stick with politics to begin with, because we've addressed that other bit earlier. So what's your prognosis, Indranil? As someone jokingly said, the question is whether it's going to be, 320 or 350 plus or whatever. But I think markets are completely pricing in the BJP and the NDA to come back. That's opinion polls are showing that absolutely clearly and starkly. So what's the roadmap for the markets from here, in your opinion, in response to the elections?
So I think that, we are not psephologists, so we just go by the opinion polls, and the opinion polls clearly make a case for political continuity. I think as far as a BJP re-election is concerned, that is now broadly in the price. So I think that if that is satisfied, and then I think the markets will also try to look at the other sets of factors that are going around right now. What is happening globally, what is happening to the Fed, what is happening with the war, and so on. If you look at the BJP's policies that have come from the manifesto, I think there are two parts. The first is where they talk of macro financial stability, which we interpret to mean that they will build up FX reserves, continue to build up FX reserves for external security. They will continue to have a strong preference for strong balance sheets, bank balance sheets, and finally, fiscal discipline. So that's one part. The other is where there will be a focus on infrastructure to build global manufacturing hubs. So I think that this is broadly, as far as markets are concerned, these are the two broad, But
Indranil, you're saying all of this, Indranil, this is in the price. This is all well understood, right?
Yeah.
So are you saying the market for sort of continued outperformance will need something more?
So I think, right now the markets are clearly being driven by global factors. And, that is something that will dominate for the time being. And in any case, you're not going to get any news from the elections till June 1st, when the exit polls come out.
Indranil, we typically see a pre-election rally. The last couple of months, markets have just gone sideways. So where is the pre-election rally? And you spoke about global volatility. How does one guard against the global volatility in the portfolio?
So I think that, we did have a rally in December after the state polls. So that's number one. And as far as global volatility is concerned, I think the RBI has been building up high FX reserves to ensure that, beyond a point, if there is global volatility, we are also able to insulate ourselves to the extent that is possible.
Hi, Indranil. Good morning and good to see you. And as you mentioned in your note, Indranil, global cycles, they influence the Indian economy more than who rules Delhi. And that's going to be rather important, because in the last few days, the sense you're getting is that rate cut has been pushed down maybe towards the end of the year, and probably we don't get a rate cut coming in from the Fed. Keeping that sort of a backdrop, what kind of action are you pricing in from central banks, both from the Fed as well as from the RBI? Because most on the street were factoring in that latest by September, we'll see some action. Your take?
Yeah, so, obviously, the Fed has turned hawkish again. And we at CLSA have pushed our first Fed cut to November. I have, in fact, in India, pushed my first rate cut to October. This is a challenge for countries like India. You see, the US is keeping rates high because they have high inflation. Here, we are having to keep rates high because of the Fed. Our inflation numbers clearly don't warrant a 6.5% inflation rate. So I think all over the world, if the present situation continues, especially for EMs, this cannot but affect growth beyond a point, because you are going to sit with very high real rates.
No, absolutely. Just the other bit, Indranil, the jump in oil, right? Now, there are two parts. One, we already are hearing from the US that there will not be maybe rate cuts much later and lesser. The quantum will be lesser. The RBI, nothing before the end of the year. That's what some are saying. What is your own sense here, Indranil? Now, with oil jumping, and if it stays north of 90, and it's got the possibility to move higher, how does that spoil the does it raise questions of macro stability, etc.? What's the sense?
See, I think the stress test for oil has now moved up. We all go and think of the 2008s, but then, oil was at 140, but the economies were much lower. But obviously, you don't want high oil for an oil importer. But we need to wait and watch whether, this sustains or whether it just goes up and comes down, as happened a couple of years ago.
Okay, got that. Just talk about the rupee as well, Indranil. But it's not just the rupee, right? It's the Korean won, the Indonesian rupiah, you've got the Taiwanese dollar, all at multi-month lows. Rupee, of course, had been making lows as well. Is it idiosyncratic country-specific factors at play, or this is just broad dollar strength?
See, it's broad dollar strength for sure at this point in time. But also remember that the seasonality goes against the rupee from now till September. So, in India, basically April to September, you have the summer, you have the rains, production comes down, exports come down, the rupee weakens. And then come October, weather improves, production improves, exports improve, the rupee strengthens. So from here till August, September, we will also have an unfavorable seasonality for the rupee. That is not, I think, the driver of this here. It's a very clear case of the dollar strengthening, because the Fed is sounding hawkish. And our call is that once the Fed actually begins to cut, the dollar goes to 116 a euro. That's by March 2025, and we see the rupee at 82 on the back of that in March 2025. But in the interim, you have all this noise coming and driving the rupee up and down, and all other emerging market currencies, just not the rupee.
Okay, all right, Indranil, appreciate you joining in and giving us your take on how you see the entire global setup as well as the Indian economy. Thanks a lot for joining in. We look forward to chatting up with you rather soon as the elections do progress as well.